Welcome to the Kennedy Events Podcast, where we feature top marketing, communications, and future of work leaders and share their biggest takeaways and insights. We love these conversations and hope you will too. Let's get started.
Welcome to the Kennedy Events Podcast. I'm your host, Paige Buck. Past guests include Susan Jacobson of Blab & Jacobson, Russell Benaroya of Stride, and Elaine Honig of Studio 440. With me today is Sara Razavi. Sara is the CEO of Working Solutions CDFI, a small business lender specializing in microloans to startup and early stage businesses. Working Solutions serves 19 counties in Northern California. And under Sara's leadership, Working Solutions has grown its assets by 240%, expanded its offerings, doubled its footprint, and funded 2,500 plus businesses. Wow. Today's episode is brought to you by Kennedy Events. Let's face it, events are stressful, time-consuming, and expensive, which can make you feel exhausted and set up for failure before you've even begun. Kennedy Events provides expert management and design for all your corporate event needs, freeing you up to focus on your marketing, sales enablement, and leadership priorities. You can learn more about us at kennedyevents.com. Hey, Sara.
Hi.
How's it going?
Good to be here.
Glad to be here. Glad you're here too. So you and I both have in common that we started with undergrad degrees in theater, although you were smart enough to double major in sociology. I wasn't. How does theater serve you in your role?
Oh, it's constant. It's the training, of course. And, I think not only my undergrad degree, but my graduate degree in business school, there's lots of business programs that are now including improv and theater as a way to set up managers to really take on not just accountability, but team building and an opportunity to engage their teams, both in how they communicate, but also how they involve, because theater, as you know, Paige, is so many different people coming together to create art. You've got the playwright who wrote the piece, you've got the director, you've got the actor, you've got then the crew. And I'm always so grateful for that training of trusting a team. And no matter what your part is, you could have the smallest part, you could be the lead actor, you could be the director. You're going to be a member of that team. And so that's how I think as a manager serve me in understanding the team play.
That is such a good note about collaboration. I think you also touched on improv. And I don't know about you, but like the number of times you hear someone in business say like, let's use a yes and mentality. And you're like, yeah, I've been doing that for 20 years. Right?
Yeah. Yes. And it's they do trainings in yes and with managers. My business school didn't have that, but the other thing I draw on, Paige, is debate. I did a lot of speech and debate, and just being able to capture, trying to hone in as a communicator, which all leaders are, honing in on what is the argument the other person is trying to make, and being curious about like what is their end goal. The other thing, we were talking offline about this, but just anytime you are growing in your career, and frankly, as a newer parent, as a parent too, this constant I thought I knew that, but maybe I didn't. I thought I knew that, but maybe I didn't. So the opportunity to feel comfortable asking, is that what you meant? Just that clarification. That was a key part of speech and debate, just being curious about your opponent's position. My speech and debate experience was definitely more on what's called the interpretive categories, which are more acting.
Mm-hmm.
But for those speech and debate geeks out there, you couldn't compete at certain levels without having a certain number of points, and being a debater always helped garner up those points.
Oh my God, I envy that. I think I did that. I can't remember, what is it called? The extemporaneous or the category for a hot minute in high school. And we had a nascent team, so it was very lightweight. And man, I wish I had. When I hear people talk about that, I think that would have been a really good formative experience.
It really was. I mean, I draw on it so often. And so now, whatever high schooler or junior higher I meet, I'm always like, hey.
Speech and debate all the way.
The one. So,
embrace the inner nerd in you.
Totally.
Yes.
As I think others do mock trial or, there's such formative things. And I'm always, again, as a new parent, just baffled by how informative those early years, not only, elementary, but up to 18, really begin to shape what you step into, what you're attracted to in college, after college, as a career. So I think getting a little bit out of your comfort zone.
But then you're making me wish that there was like adult intramural, like the way you go play like pickup soccer or pickleball. I want adult intramural speech and debate or adult intramural model UN or something. Because if you missed it the first round, I it's not too late, but I have to find that thing. So you mentioned your MBA, you focused on social finance. How did you know what that was? What is it? And what made you want to pursue it?
Yeah. Not every school has it, certainly didn't at the time. And I think at USF, I had to create my own track because thankfully USF, and the reason I chose to go there, University of San Francisco, was because they had a very deep social or nonprofit awareness in their business school. So plenty of management schools have a siloed track of an M&A, Managed Nonprofit Administration. But while USF had that as well, their MBA, it's a San Francisco-based school. It's really rooted in social awareness. They have a great law school there as well, also deeply rooted in that. So it's actually why I decided to go there. And the social finance piece was really, you're required in every MBA program, no matter how it's officially structured, you're required to take a certain number of finance classes. Similarly, analytics classes, similarly, management, and then you get to decide what you want to deepen. And I had originally thought, wow, on finance, I'm just going to dip in and dip out, whatever I need to know. But during that while, having had a social sector background, and for those unfamiliar, that's how I refer to the nonprofit space, because I don't think profit or nonprofit, that's your business model. That's not the sector you're in.
And it's confusing. It's confusing to everybody. Like, you mean at the end of the line, you have to have zero? Like, no.
Exactly. If you actually did that, you wouldn't survive. So, right. So at any rate, it was, this social sector lens, and I kept getting pigeonholed. Like a couple of other MBAs, there's like a handful of us who've done that kind of work of like, oh, well, you're going to be a consultant for nonprofits, or you're, just kind of, it's like, no, I need to shift. But the other, and what frustrated me about finance is that it was it rarely talked about the local. It was very much on a national, international level. And so I started looking personally. And so was introduced to Working Solutions, the organization I am now the proud, leader of.
Say that again. The proud leader of.
I stumbled on that because I do really think it's such a team effort. But I'm grateful to be the CEO and proud to be the CEO. So I ran into the founding CEO at an event. And I just kind of finished a core set of finance classes. And I was just like, Emily, I cannot believe we don't learn more about local finance and local investment and local lending and how we stand up our communities in that way. And she's like, well, you can come and volunteer at my organization. And
that's all we do all day.
Right, exactly. And at the time, Working Solutions, she had begun it when she had just come out of college. She's just a few years older than me. And so the organization really was still, even though she'd been working at it, but given her own career trajectory, the organization was very much in its early stages. I mean, it had been around at that point for over 10 years, but would have still been considered an early stage. 5 persons, primarily otherwise volunteer run. So they were used to someone jumping in. And so I really took full advantage of being an MBA intern and then growing into the opportunity that was afforded me after grad school and so on.
Wow. And so when you noticed this gap in like the learning you were being offered, is this a gap, this role that Working Solutions plays as a local lender? Is it a gap that exists in many other places? Like it's not taught because we're not doing it very well?
Yeah, I mean, a couple of things. Finance is multiple tools. It's debt is one and equity is the other. And then the multiple facilities that come out of those are, again, for clarification, that refers to different products that a financial institution may have. And so oftentimes in business school and graduate programs, they lean really heavy on the equity side. So impact. And we know that most equity poised organizations or businesses are at a much different scale, growth plan. Often, as some of your listeners might know, a certain demographic of who can actually even think about ever being VC funded tends to be white, tends to be male, tends to be of a certain age.
That's such a nice way of phrasing it. It's overwhelmingly white male.
Yeah. And so it unintentionally leaves out of such a huge segment of the population because frankly, most bankers will have CPA, accounting, that kind of background. They definitely do start to get into business school and management degrees, but after a certain period in the industry, so they kind of grow in their roles. Anyway, all to say, you can go into business school hoping to have a social mindset, but just the way it's set up, it tends to position you for these larger organizations and to think about giving back in a way that's not direct. So CDFIs, which is one that I run, Community Development Financial Institutions, were born, a long time ago, as communities have felt for a very long time. And when I say long time ago, I'm talking about 1800s. Grown out of this need of like feeling, hey, I'm not getting supported by the community bank because I don't look like that banker. Because so much of banking, even before our modern sense of banking, was about relationships and who are you going to believe is going to pay you back. And it tended to be someone who looked like you, whose story you understood. So CDFIs started popping up. CDFIs in their history were supported actually by religious groups, Catholic primarily, who really knew that communities needed some other line of support. They have since graduated and grown to get a different capitalization model. They get their funding from federal, state, private and public, and private corporations as well. All of that to serve a lot of layers of institutionalized and systematic racism and sexism and the isms that you want to layer. So the Bay Area, where we are based in Northern California, is thankfully a very rich ecosystem of CDFIs. And you will find that in a lot of metro areas, New York Metro, DC Metro, Boston, etc. You'll find that. But we have found as an industry, there's still lots of gaps in rural, etc. So there's still a lot of opportunity to do more in our industry. But yes, to your specific question, falling into Working Solutions opened up my eyes to an industry that is frankly pretty invisible until you begin to notice it, and then you're like, oh yeah, so and so got funded by a CDFI.
Yeah, fascinating. And so, how do most small businesses find Working Solutions?
It tends to be, referral. We certainly try to engage in as many, PR and public relation opportunities as possible, including this opportunity to speak with you and making sure that our partners do refer to us. But usually a small business tends to ask for debt or any investment first from their banker. Mm-hmm. You're a small business entrepreneur or you're an entrepreneur, you haven't started your business yet, and you're just kind of trying to figure out, well, how do I get that startup capital? Depending on your demographics, you might be able to reach into your community or your friends and family network. But some may not have that access. Not only might you be limited in your access to capital, but your network might be limited in your access to capital. So it tends to be, hey, I have a personal consumer account with you. I'm thinking about having a business banker. What could you offer me? Mm-hmm. And the reality is most bankers can't. They don't fund startups. They will refer you to, depending on their savviness. But one of our hopes is that they refer to us. So we get a lot of referrals from our bank partners, and we get a lot of referrals from training centers where a small business owner may go to start to think about how to form their business plan or their idea. So SBDCs, small business development centers, are also a huge partner for us.
Fascinating. And are there ways that at Working Solutions in particular, or with the broader network you mentioned that are like rich in our metro area, that you hope to make that gap between an idea and an understanding of how to help fund that idea like faster and more accessible?
That's the hope. It's an industry that's been around for a long time, but it's an industry that I think has opportunity to scale in a way that it hasn't. And what do I mean by that? Most of the CDFIs have very specific products. And so it does happen, unfortunately, where you'll knock on a door and they'll say, we can't serve you. You fit all of our demographics and target, but you're looking for less than we usually give, or you're looking for, a commercial loan for real estate and not a business loan, slightly different. You're looking for, a consumer loan rather than a business loan, etc. So because we all specialize in slightly different, and there are larger CDFIs that do, all sorts of lending, but still their niche might be something different. It creates a problem of point of entry in that you might knock on a CDFI's door, and unfortunately, unintentionally, they also cannot support you, not because they don't have the mission to, but because they don't have the right product offering for you. So in our case, for example, if you are looking for anything above 100,000, we would argue that you should still start with us because we will likely get to that yes faster. We will give you the opportunity to build out your credit history. As a business owner, most people who come to us don't have business credit yet. They might have personal credit, but we report to both the three personal credit bureaus like TransUnion, Equifax, etc., and then also to the two business bureaus, so that you're simultaneously building this credit. So the next time you're in front of your banker, they go, oh, you're still maybe not profitable, but I see you've got a really strong payment history. We're very interested in supporting you, or whatever the case might be. So our hope is that continuum may start with us, but you either can return to your business banker because there's enough history there now, or go on to another CDFI who offers larger loans above 100,000.
And so that's where you were talking about, was hoping you might come back to a little bit more, the opportunities you see for scale and I'll add and reach. Yeah.
I think, as with any business, you start to think like, how do I serve my client best? And if my client needs more capital than I can provide, or if my client needs more capital than I can afford to risk, that my balance sheet just can't afford that risk profile. I think it gives an opportunity to think about, well, who else in this sphere can I partner up either very formally with in a merger, or informally in a shared alliance that, the client may not experience the past, but once they're of a certain stage, now they are yours. That's our ultimate, because we seek that small businesses come to us who primarily are at that startup. And we define startup as less than a year in business. Pre-revenue is fine. Idea point at the point of ideation is fine. But we do need you to have your business structure in place when you get to us, and a couple of other elements that are outlined on our website. But say you come to us and you are of the mindset that this thing is going to blow up and it's going to grow like crazy. And in 3 years' time, frankly, even if my loan with you is 5 years, I got to pay you off and get more capital. We work with you with that plan. You might also come to us and, have a bodega, have an industry line, a lifestyle line that you really have planned for, at most, maybe adding 2 more jobs in addition to your own. It's not intended to be this massive operation. But knowing that gives us a sense of how long we can be of service to you versus, you really will be set up. The saddest experience we have as a lender is, with all good plans, still not being able to get that business up to the next echelon of support.
Yeah, I hear that. Where do you think, aside from fit of loan size and having your basic business structure in place, where do you think businesses struggle and maybe have the most misunderstanding of what they could expect from you, or from the broader community lending opportunities out there?
Yeah, I think a lot of times, just to put it plainly, if you're asking anybody for money, either to lend it to you in the form of a debt or a note with some interest rates, etc., or that you are going to sell a portion of your company, even informally, for 200,000, for 100,000, with this commitment of maybe buyback at some point, that you own or have a say in our operations. What we tend to see is a lot of those fast decisions early on in a business's life that you just haven't thought through the ramifications of. Signing off on you and I will be co-partners, but not knowing the liability around that. So similarly, when someone comes to us, one of the biggest complaints, and I think this goes for any lender, I have heard it from different size lenders, is the frustration with the amount of due diligence that the lender may have. Now, I will say there are some lenders that go too far for the amount that they're offering. It's like, come on, it's a $5,000 loan. You don't need to, so long as it fits a certain parameter. And that's inside baseball for a lender. Figure out your credit profile, get through that decision-making and process flow quickly so that you don't take on the kind of risk you're uncomfortable with, but you get speed to capital. But regardless, I think anybody who's taken on any size loan, student loan, home loan, a mortgage or whatever, or even a credit card. Credit card is actually, I think, what's tainted everybody's expectation is it's really not a fast decision unless you have the highest credit score.
Right.
Or a co-signer who just basically is saying yes, give this person money. If they falter, I'll pay on their behalf. As a lender of any size, you're going to want to do your due diligence, and that takes time. So to your question, many times we find business owners surprised or frustrated by, and for one business owner, it's 3 questions that gets them over, what? Why are you asking me this? And another one, it might be, 50. But I think at the crux of it is just recognizing you're asking someone to take a leap of faith in your business and your idea. So being patient through that process is highly important.
I love that patience. And it sounds like, you said that about credit cards. I think ready access to credit cards, mortgage lending over the last 15, however many years, plus Silicon Valley. We're we're so accustomed to what we imagine. We're surrounded by, like, I had an idea and people threw millions at me.
Yeah.
And then I lost it all. And I still look amazing. Like,
and that goes back to, who are we talking about?
Yes.
That person who had that idea, who, whether they lost it or not is really not as important or as followed, comes from a certain network, certain demographic that allows for that flow of capital. Whereas, I think just kind of putting into perspective that who we're talking about wouldn't qualify for even that credit card.
Mm-hmm.
If you were applying, many of the businesses at startup, unless they take on, and this is the usual way, you either go to friends and family or take on or pay it through personal savings, and then the next layer is personal debt. Which as you depending on how savvy you are, how committed you are to your business, you eventually decouple. But if you don't have the right credit history and there is actually a formula, right? That's because it's a number system. If you don't fall within those higher numbers, you're not going to be offered that pre-approved loan. The marketing might say you would, but you won't be. And if you are, it won't be at the rates that they say, because they have that fine print. So I think there's this reality of what actually people have access to and what is believed that they have access to, which frankly came into fruition with COVID. We saw so many businesses suddenly find themselves, wait, I'm supposed to have a bank relationship. I don't know who my banker is. I'm not going to be able to apply for this PPP or EIDL or whatever the case might be that was being provided through the SBA. So I think it's just even self-recognition of these rates and opportunities, unfortunately, are targeted to a certain population. And unless you check a lot of those boxes, you're either not gonna get the offer at all, or you're gonna get a different offer. And so people often ask us what our rates are, and I say, and then suddenly they might hear, in COVID, our rates have had to be responsive, but micro lenders tend to be in the 2-digit percentage. So for us, it's 9 to 11% is our interest rate. Sometimes they're like, what? I could get a 0%. Please do. Please go ahead and try to get that.
Sorry to be the bearer of bad news.
Yeah, who we tend to be, when you actually go unpacking that, the offers that are available to many of the individuals we tend to serve tend to be, at best a rate with your credit card that's upwards of 20 to 30%. And then similarly, there might be cash advance opportunities or, online opportunities that have really opaque interest rates. You don't really know what the rate's going to be.
So it sounds like, besides doing a lot of education about what the real due diligence looks like and cautioning for patience or requesting patience, something else you said earlier makes it sound like you hope to meet your ideal client early enough that they haven't made a bunch of decisions that are going to further hinder them, taken on a lot of personal debt, partnered up with somebody they don't have a great relationship with, given away equity to friends that they're now kicking themselves over. So don't do any of those things before you.
But the reality is you meet people where they are. You meet people where they are. And what I have always found is anybody who steps into business with that entrepreneur frame is a can-do and problem-solving individual. Mm-hmm. So whatever decisions they've made solved a problem. And so, whether they have the available information to know that it might solve this problem, but it's going to create 2 other problems down the line. As an organization, as a leader, I approach individuals with humility, that there is there's a right way to do it, but I'm certain the reason you had your reasons for why you are where you are, and let's make sure we support you moving forward.
Love that. I love that. And so that's great. Let me bring it back around to your leadership. So you came on after your internship. Yeah. You were hired on as the COO in 2013. Realize how much time has passed here. And you succeeded Emily, the founding CEO, in 2018. What was it like succeeding a founder, finding your own footing, and then growing from there?
Trippy. Trip is like it's got its fits and starts, but I think there are folks who begin businesses and ventures, and there are folks who grow them, and there are folks who sustain them. I think there's a general business cycle. I always knew I was not a starter. I am just not that person. Mm-hmm. And sometimes I scratch my head that I'm in this business because, I tend to be around people who have that vigor, that excitement. And oftentimes, I think there can probably be a formula for who comes after a founder and who comes after that person. But that at different stages of the business's life cycle, you're going to need different types of leadership. And unless you, as the founder, are willing to change your, essential self to grow, which is totally doable, into these other phases, the same thing that excited you as a founder is not going to be what excites you as the next. So for me, it was very much about stabilizing, formalizing, and making sure we had the systems for scale, less about the immediate vision of there's a need to be addressed. It's like, okay, well, we know who the target market is, but how do we continue to improve upon it? And I think, having a founder who recognized that in herself, that, this is not exciting me in the same way it was, that was key, because there are plenty of founders who may not see that or see that a little later. So I was very grateful to have had a founder who was ready to step aside, who actually took time, a grace period after as well. Emily is now on our board, but we both agreed it would be a period that she wasn't. And I have found that decisions like that are so important, and that personality profile of not only I'm ready to leave, but I'm ready to trust this to somebody else is really key. I think why I said, it's tricky and trippy is you're not just dealing with the two of you. You're dealing with a board or another, or depending on how your structure is, with your leadership team, with the staff. And so, and depending again on how large a shadow that founder cast, your comfort with living with legacy like that is highly important. But as it's
like deeply carved expectations and ways of doing things, and everything's got to pull up out of that and shift.
Yeah. Which is why I think it's always nice to, if you had a very specific profile as a founder to, in your candidate pool, to try to find someone who's quite different in their idea of problem solving and their approach, and even in their demographics, because that person may have spoken, the founder may have spoken to a vast majority of people, but still they represented a certain optics. So, you can even set this person up for success by, if it was a guy leading it, then you've got, try to search for the next woman leader, and already there might be a little shift.
Dynamic shift. Sure. All right. I'm going to give us a lightning round and bring it home here. All right. Proudest moment so far in your time at Working Solutions?
Oh, that's not even, I don't even know. I'm so impressed with the way a lot of times we hear integrity, and we do have integrity. I think a big part of that is we believe as a leadership team in the small strategic decisions are as important, if not more, than these large plans. You need to have a large plan as a North Star, but the day-to-day strategic decisions are important.
Nice. Where do you go to learn and get advice and share?
Someone told me your mentors change over time. You're never going to have the same set of mentors. So your mentors are going to reflect the problems you're having. So you seek out those kinds of thought partners. But honestly, I diversify my podcast listening because I think it's important to just be aware of different thinkers
Okay, favorite podcasts. Give me one.
Oh, I love Terry Gross a lot. I could listen to hours and hours of fresh air. She interviews.
Sure.
What's that?
For sure.
She interviews. She interviews world leaders. She interviews entertainment and lots of thinkers. And then most recently, the Ezra Klein show. Also a really great set of thinkers. So I used to have a widespread. I tend to now do 2 to 3 and then move on. But those are my top 2 right now.
Amazing. Then those are some strong ones for sure. For sure. Everybody's an Ezra fan, and I need to get in there more. Every time I hear him, he's fantastic. All right. Last question before I ask where people can find you. Best piece of business advice you've picked up or life advice you've picked up recently?
I think stay curious and own up to it. I think a lot of times, and whether it's called imposter syndrome or what, we limit ourselves in feeling comfortable in just saying, I know this really well, but I don't know what you just said.
Say more about that, please.
Yeah. Yes. And that doesn't disqualify you as a leader to just own up to not knowing that piece of information. A lot easier said than done, but I highly encourage women and communities of color and thinking about generational gap issues. You are where you are. You are in the room that you're in. And, allowing yourself a question. If they're going to think less of you, they've already thought less of you before you even opened your mouth.
I got tingles there. I have this little thing up over next to my camera that says, I have more to learn than I have to teach. Just a reminder to me to shut up and ask questions and then shut up and listen.
Yeah.
I love that.
Stay curious and be very transparent about that curiosity.
Yes, I love that. All right. We've been talking to Sara Razavi, CEO of Working Solutions CDFI. Sara, where can people find you and Working Solutions?
Thank you so much. Please look at our website, workingsolutions.org. And otherwise, if you're looking in the Bay Area, you should be able to find us if you're looking for CDFIs, Community Development Financial Institutions. But our website, we're present on Facebook, Instagram, and Twitter under our name, Working Solutions. Hope to find you online. Thank you.
Awesome. Thank you.
Thanks for listening to the Kennedy Events Podcast. Come back next time and be sure to click subscribe to get future episodes.